Whether you're a freelancer, an artist, an engineer, or even a domestic worker, if you earn income in South Africa, SARS wants to know about it. Income tax touches everyone, and knowing how it works isn't just smart, it's necessary. Today, let's uncover the basics: what income tax is, how SARS calculates it, and how these rules apply to you. Real-life examples included, facts made simple. So let's get started. So, what exactly is income tax? In South Africa, income tax is a fee you pay to SARS on money you earn. This covers salaries, hourly wages, freelance or contract work, profits from your own business, and even artistic or creative income. Our tax system is progressive, which means the more you earn, the higher your percentage of tax. Tax brackets determine your rate, and this rate is applied to your taxable income. It's about what you make, not what you do for a living. But how does SARS decide how much you pay? First, SARS calculates your total income, every rand from all sources, be it a full-time job, freelance projects, or business profits. From here, they'll subtract allowable deductions and rebates. These include retirement contributions, medical tax credits, travel allowances, and, for some, education expenses linked to your job. That leaves your taxable income, the amount you owe tax on. Then, your specific tax bracket is applied, and finally, tax rebates further reduce what you pay. It's a step-by-step system designed to be fair and tailored to your personal situation. Let's see how this plays out for different types of workers. First, take stable employees, like nurses or engineers. They earn a monthly salary, and tax is usually deducted by the employer through PAYE, pay as you earn. The employer registers them with SARS, deducts tax every month, and issues an IRP5 at year-end. When you submit your tax return, you can claim allowances, medical credits, travel, or even retirement savings. Sometimes you receive a refund. Sometimes SARS may ask for a little more. Now consider freelancers and independent contractors, for example, consultants and IT specialists. They don't have PAYE taken off automatically. They're responsible for declaring all income to SARS and usually register as provisional taxpayers, which means paying tax in 2 installments per year. The benefit? They can deduct valid business expenses, internet, office equipment, professional software, or costs for a home office, if they qualify. Keeping accurate records is crucial to ensure deductions stand up during a SARS review. Artists and creatives, think musicians, actors, content creators, often have irregular, project-based earnings from multiple sources. For them, all income must be declared, even once-off payments. Expenses like studio rent, equipment, work-related travel, and agent commissions may be claimed as deductions. Whether your earnings come monthly or sporadically, every payment counts for SARS. What about domestic workers? Income might come in weekly or monthly wages. If the total is below the tax threshold, they may not owe income tax, yet it's still legally considered taxable income. When earnings exceed the threshold, the employer must register for PAYE and deduct the right amount each month. SARS treats this as income, regardless of the kind of work. So, what should you remember? Your profession doesn't decide whether you pay tax, your earnings do. Every cent of income must be declared with honesty. Deductions must be legitimate and properly documented. SARS links data and performs audits, so accuracy matters. And when you're unsure, consult a registered tax practitioner. Professional guidance can be invaluable. No matter who you are or what you do, understanding income tax helps you stay compliant and avoid surprises from SARS. Knowledge is power, especially with tax. Stay informed, do the right thing, and build trust with SARS. Thank you for listening. Like, share, and subscribe for more South African tax tips and clear answers you can trust.